Could you hear me from back there?
Oh, yeah, very well.
That's what I thought. I don't need this.
No, better. It helped.
Then she got into doing all this planning and sorting for that. So anyway, I know you're talking about that.
No, I'm just showing this because this lady knows.
I've talked to her. Stephanie?
Jane.
Her name's Jen?
We're gonna actually have another one that goes through.
Right. She was like knocking on the other room.
The reason I'm telling you this is because my visual aids stuff at meetings.
Well, I every time I get down here,
Carolyn is my charge.
She would get a portion of the salary. I said, she would just a portion of it. So if it's this time, we should do place gets 10, I get 10, I decided to it's 10. They decided something is that they get a portion. They of what comes. Good evening, everyone. Good evening. I think we will get started. Thank you, everyone, for coming to tonight's presentation titled The American Rescue Plan Act Fiscal Recovery Funds Compliance and Tracking. My name is Vicki Urbanik, and I'm Porter County Auditor, and I'm very happy that so many of you took the time out of your schedules today to join us for this discussion. This is a very significant program, and we are really excited about the opportunities that it has for Porter County. And so thank you again for joining us tonight. Hope you don't mind. I am taking off my mask so that I can talk. I just wanted to let you know, though, that that's why I'm taking it off, just because I'm standing up here. Okay, I just want to share some opening comments. I have two objectives for today's presentation. First, we are going to review the Fiscal Recovery Fund, the eligible uses, but also the processes that we need to go through to ensure that our projects are in compliance with the federal statute. And my other objective is to share with you the roles and responsibilities of our county auditor's office. The county auditor's office is the fiscal agent for county government. So we pay all of the bills for county government, and when it comes to federal grants, we prepare all of the financial reports. And as you will hear, there will be a lot of reporting involved with the ARPA monies. And in addition, it will be our financial files that will be subject to audit when the external auditors come and audit the county records. So we play a very important role in this whole project, and we're very excited about it, quite frankly. I do just want to point out that I'm going to be speaking from the perspective of the county government. I'm not really addressing cities or towns or other governmental units that are receiving some of these funds, because there are a few different processes. Okay, so let us begin. The first slide that we have today takes us back to 2020. As you may remember, when the pandemic hit, U.S. Congress passed several pieces of legislation to respond to the pandemic. And one of the most popular pieces of legislation was the CARES Act. And so from the CARES Act, Porter County received a number of grants. Now, the way that the CARES Act worked was that the federal money flowed to the states, and then various state agencies set up the various grant programs. And you can see that Porter County worked with a variety of different state agencies. The two largest ones were the Indiana Department of Health and the Indiana Finance Authority. The state was the one that reviewed our claims, our invoices, our reports, and they were the ones who determined if we got this money. Now, things are completely different with the fiscal recovery funds. For one, thanks to some lobbying efforts on the part of organizations like the National Association of Counties, at the county level, we are not at all dealing with the state with these grant funds. We are working directly with U.S. Treasury. So it is a whole different set of rules. It's a whole different ballgame. And it's a change that I actually think is a good move for us. Okay, so next slide. On March 11th, 2021, President Biden signed into law the American Rescue Plan Act. This is my copy of the law. It's a pretty major, significant statute. All of us benefited in some respect from this. Remember the economic impact payment, the last one that we got? That was in the statute. There was an expanded child tax credit for those of you who have little kids or who have dependents. There were significant changes to the earned income tax credit. All of that and more was in this statute. And the program that we're discussing today can be found, at least in my copy, way in the back. It's technically called the Coronavirus State and Local Fiscal Recovery Fund. You might see it abbreviated as SLFRF. Now, I know that doesn't roll off the tongue very well. Most of us just talk about ARPA. But I just want to bring that up to let you know that we are talking about just one part of a very large piece of federal law. Now, even before the president signs this into law, on the next slide, we'll show you just some of the many training sessions that have been held over the past 8 to 10 months or so. These have been training sessions held throughout the country. Of course, in Indiana, they were geared towards county auditors and other county officials. The photos here are just some of the presentations that our office participated in. All of these training sessions were geared toward helping us, the fiscal agencies, understand what is all involved with this federal legislation to help us ensure that we are in compliance with the law. Now, up until just recently, all of these discussions focused around what was called the interim final rule. And this is my copy of the interim final rule. I've literally been carrying it around with me almost everywhere that I have been going. After the monies were released, the first round of monies, Treasury had to issue some rules in case any government units were ready to start spending their money. And so this is an authoritative guide. And so these are the rules that government units followed. But we all knew that this was not the final rule, that Treasury would be issuing the final set of guidance. They received more than 1,500 comments that they reviewed and that they responded to in the final rule. So on January 6th, that's when everything changed with this program. Treasury did in fact release the final rule. I think throughout our country you could hear fiscal officers either shouting yay or fearful responses. I was pretty excited about it because I really wanted to see how things would change in the final rule. And I have to say, there were many, many changes in the final rule. For a variety of reasons, I am very happy that Porter County government did not rush into spending this money, and you'll hear why in a little bit. Okay, so with the next slide, we're going to be talking now about the eligible use categories in the final rule. There are basically 4 main buckets from which we can spend our fiscal recovery fund monies. They are shown here in a very specific order. From the top to the bottom is from the most flexible to the least flexible. In other words, the least restrictive to the most restrictive, okay? So we're going to stay on this slide. We're going to talk about the first category called revenue loss. Now, under the interim final rule, governments throughout the country really wanted this category. And the reason why is because Treasury said that if you have money in this bucket, you can spend it for any government purpose that you want. You don't have to follow the other rules. So as long as you have a legitimate government purpose, you could use this pot of money for that purpose. There was just one catch. You had to calculate revenue loss following a very specific formula. We did this calculation in-house and we determined that Porter County did not qualify. Now, I do want to make it clear, we did have significant revenue losses in some departments. Let me give you some examples. During the pandemic, many people reduced driving, so we stopped paying the state gas tax. Well, that decimated our highway department because they receive gas tax money and they lost about $250,000 in 2022. Another example. Our Expo Center and our Memorial Opera House are self-sufficient venues. They live on the fees that they generate through their programs. When they shut down and they stopped having programs, they lost a significant amount of money. The Opera House lost about 80% of its revenues in 1 year, and they had to furlough their staff. It was significant. And our tourism department also lost money because people in 2020 largely stopped going to hotels, and that's where they get their money from. So we did have fiscal losses, and it was severe. But under the specific calculator, we didn't qualify because we had to look at most funds in the aggregate. Well, we heard that many other government units, many of whom paid money for somebody else to do this calculation, ended up with the same result, that they didn't have revenue loss. Well, now, under the final rule, everything on this particular category has changed. Under the final rule, Treasury is saying that you can use up to $10 million of your allocation for whatever use you want. So governmental units could use up to $10 million without having to follow the rest of the rules. They could do, let's say they could build roads. By and large, roads are not allowed in this program. But if we wanted to, we could put a road in this category, up to $10 million. So those counties that paid money to do this estimation, that's one reason why I said I'm happy Porter County waited. So the next slide gives us a little scenario. What happens if our county commissioners decided, with the backing of our council, of course, decided to utilize this full benefit of the $10 million? Well, county government is getting just over $33 million. So if you carve out $10 million, we still have $23 million left that we would have to follow the rest of the fiscal recovery fund rules. Now, let's compare that to most other counties in Indiana. Our county to the south, Jasper County, they're only getting $6.5 million. Obviously, they can't use $10 million because they're not getting $10 million. but they could use all of their 6.5 million for whatever purpose. They don't have to go through all of the planning like we're going through and following all of the other rules. Now, I'm not saying that that's going to happen. I'm just saying that that is one way that the final rule really changed this program pretty significantly. Now, let's go to the next category. Remember, we're starting to go a little bit more restrictive. The next category is called public health and negative economic impacts. This is a very large section of the final rule, and there's lots that can be talked about this. In order for us to have a project in this category, we have to do an analysis. We have to identify that there was a harm or a need caused or exacerbated by the pandemic, and we have to identify who was negatively impacted. And then the second step is we have to devise a project that responds to that need or impact. Now, if you really get into the final rule, you'll see some terms that are very important that just keep popping up. And the term responds to or responsive is one of those important terms. So my interpretation of this developing a program that responds to the harm or the need means that we have to be thoughtful in our projects. We have to have projects that relate to the harm or need. We can't exaggerate, we can't make things up, we can't go overboard. So I'm going to go into this category by breaking it down into the two main topics. First, let's talk about public health. Under the public health category, there are subcategories, as shown on the next slide. There we go. And I'm just pulling out some of the enumerated uses in two of these categories. An enumerated use means that Treasury actually lists this project in the final rule. If you have a project that's considered, that's an enumerated use, we pretty much have full confidence that we are in compliance with that project. So under these subcategories, under COVID-19 mitigation and prevention, there are numerous enumerated uses. It's just about any kind of public health type of a program. Anything from vaccine sites to even building a new medical type facility to buying PPE. You can think of various public health programs, and more than likely, it is in this particular category. I also want to talk a little bit about one of the other subcategories, responding to violence. In the final rule, it talks about how during the pandemic, in some segments, violence increased, specifically in domestic violence issues and gun violence. So under some of the enumerated uses, we could use our fiscal recovery funds for programs that respond to violence in such ways as street gang intervention programs, or helping domestic violence victims with relocation or their child care needs, emergency housing assistance. There are a number of enumerated uses that we could use under this particular category. Okay, now let's move to the second part of this same big category. Remember, we are still in the public health and negative economic impacts, but now we're talking about negative economic impacts. The best way that I think everyone should look at this category is to think that the first part of what we just talked about focused on public health and public safety. This part of this part deals with this recognition that there were some populations that were impacted by the pandemic, not necessarily because of health, but because of financial impacts, that there were groups or populations that were financially hurt because of the pandemic. And we can use our fiscal recovery funds to help these entities come back fiscally. So now, this section is also broken down into subsections. And the first one is assistance to households. This is a really interesting category. It is huge in the final rule. This is my copy of the final rule, by the way. This section takes up about 70 pages, and it is pretty extensive. Now, in order for us to devise a program for people in this category, remember what I said, we have to identify who was impacted. And the final rule says that the people who are eligible to receive benefits from this category have to fall into one of these categories. They have to have been households or individuals who experienced unemployment, food or housing insecurity, or who are low to moderate income. And the final rule gives us guidance on how to identify those. That's a pretty big, broad swath of people. So if we identify those people, those households, then we can devise programs to provide help for these households who are considered financially impacted. Now, the eligible uses are really, really extensive. They range from housing counseling, legal aid to help in housing evictions. We could even, if we wanted to, come up with a program to help people pay their delinquent property taxes. We could use our monies to help with pressing needs like burials, survivor benefits if you lost someone due to COVID. We could help build new child care centers. We could have after-school youth tutoring programs. The list is pretty extensive about all the different uses that can be developed to assist these households who are deemed to have suffered a financial impact. Now, there's another category of negative impacts, and this is called disproportionately impacted groups or populations or classes of people. Now, who are disproportionately impacted? Under the final rule, these are individuals in the U.S. territories, tribal governments, or the category that affects us in Porter County, a qualified census tract. Qualified census tracts are Census Bureau determined geographic areas with socioeconomic issues, usually elements like high poverty, high unemployment. To the best of my knowledge, and I just looked at the map again today, Porter County has just one QCT, and it's right here in Valparaiso, roughly bounded by Lincoln Way on the north, US 30 on the south, Sturdy on the east, and Hayes Leonard on the west, and that is our QCT. So households that are in the QCT are deemed to be disproportionately impacted. And what that means in the final rule is that we could use our fiscal recovery fund monies for other uses. We get even more flexibility if we're responding to the disproportionate impacted people. And some of the uses are using the monies for things like lead paint removal and lead soil testing, going after these abandoned houses and renovating them and turning them into a nicer area. There is one category that I like to call quality of life issues. It's taking our fiscal recovery funds and pumping it back in these communities that are already struggling to help revitalize the communities. And we could use the money in a variety of ways, such as investing in parks or recreational facilities. So this category gives us a lot of flexibility with what we can do with our fiscal recovery funds. Now, the next two subcategories, let's go back to that one. Assistance to small businesses and assistance to nonprofits. Those rules are very, very similar. What the fiscal recovery fund can be used for is to actually provide direct aid to small businesses and nonprofits. And this aid could be in the form of a loan or a direct grant to help them recover from their financial difficulties. The catch is, though, these these businesses and nonprofits do have to demonstrate to us that they suffered a negative impact. And there's ways that we can evaluate this. We can look at their financial statements and see if they suffered revenue losses or increased costs, or if they laid off their employees. If they did not suffer financially, then they are not eligible under this category. Now, if you are a small business or a nonprofit in a QCT, you are deemed to already be disproportionately impacted. So you don't necessarily have to prove that you suffered a financial harm. That is the criteria around QCTs. And then the very last subcategory here is assistance to impacted industries. The final rule recognizes that tourism and hospitality venues were impacted by the pandemic. Basically, people stopped going to these. And so we could use our fiscal recovery funds to help these venues financially, and that is an allowable use in the final rule. Now, before I go on, I do want to mention that everything that I have talked about in this category, specifically with small businesses and nonprofits, is under the premise that we are using our fiscal recovery funds for direct aid. We're actually giving them money to help them recover. If they are a direct beneficiary, they are considered a beneficiary. It is very much different than if you're deemed a subrecipient. So let's say we have a nonprofit that wants to provide a program. Let's say, and I'm making this up, I have no preconceived notions. Let's say that we have a nonprofit that wants to do an after-school tutoring service for disabled youth, and they ask for funding from the county. Well, in that case, this nonprofit is providing one of these services, and it would fall under assistance to household. In that case, the nonprofit would be considered a subrecipient, and there are specific rules about subrecipients with respect to federal grants. In short, the money would be a sub-award. We would be a pass-through agency. Essentially, the nonprofit would be carrying out a program on our behalf, okay? And in that case, they don't have to prove that they were negatively impacted. They could be having a great membership drive year. They could be doing great. They're carrying out one of the programs on our behalf. Now, do we have any subrecipients? Well, in the commissioner's plan that they passed, they do have assistance to households as one of their proposed planned expenditures. And they have identified that township trustees or township governments will be the ones to carry out these programs. So the townships will be considered the subrecipients of this program. For us. Okay, now the other thing that I did want to mention before we go on, what if we have a great project and we really want to do this project, but the people we're trying to help really don't fit into any of those categories that we just mentioned, or the project isn't exactly listed here? Does that mean it's prohibited? The answer is no. The Treasury in the final rule says that recipients, government units, have flexibility to determine eligible uses beyond those that are enumerated and classes or populations that have been impacted beyond those enumerated. And that's where it gets a little bit tricky. How do we know for sure we're in compliance, right, if it's not specifically said so? Well, the final rule gives us a framework. It gives us guidance on how we can justify a project, even though it's not specifically listed. From my perspective, we have to be very thoughtful. We have to have all of our statistics. We have to make a good justification. There are some projects that clearly would not be in compliance. let's say we decide that we want to buy a yacht for a county council member for personal use. Clearly, that is not enumerated, but it's also clearly beyond what is being intended here. And please believe me that as long as I have anything to do with the auditor's office, that would not be allowed anyway, but I just bring that up. So if we're going to go through this added framework of identifying special projects, there is a way for us to do it. We just have to justify it. Now, another thing that I just want to mention, capital expenditures. Under the interim final rule, there were lots of questions about capital expenditures. The final rule really did change the rules on capital expenditures. Capital expenditures are allowed under certain instances, but they would be, in some cases, subject to additional reporting. In some cases, we have to prepare a written justification, and the final rule tells us how to do it. Okay, so now let's go to the next two pots of money. This one is premium pay. Premium pay basically means that we can give additional pay to eligible employees performing essential work during the pandemic. The final rule really did broaden the term of eligibility. Basically, all government workers are eligible as long as they meet certain wage thresholds and or they are non-exempt from the Fair Labor Standards Act. And if they are, then there needs to be a written justification presented. And yes, elected officials are not eligible. And we do know that there were some government units last year that gave premium pay to their elected officials. So it's going to be very interesting to see how their audits turn out. Again, Porter County waited until the final rule, and I think that that was a very good idea. Okay, so in our county, during budget hearings last year, the county council decided that premium pay would be very much limited to only certain groups of employees, mainly those in the public health and public safety segments. And then the final bucket, the final expenditure category, remember, now we're at the most restrictive category. This is infrastructure. A lot of us think of infrastructure as roads and bridges. That's not what this category talks about. It is limited to the areas of water, sewer, and broadband. Now, within water, sewer, and broadband, there are some uses. This is a somewhat technical category, but all of the projects under the water and sewer components, I misspoke. All the eligible uses include just about all of the projects that are already eligible under the EPA's Safe Water State Revolving Fund and the Drinking Water State Revolving Fund program, as well as projects that are under a federal statute known as the WIN Act. And these projects include MS4 projects, as well as green roofs and porous pavements and road plantings, water conservation projects. We could also use this category for wetland acquisition and shoreline enhancements. We could also use it for consumer incentive programs to conserve water, as well as for rebates for consumers to use rain barrels. So there's lots of interesting uses in this area. It is the most restrictive, though, and there are some additional reporting requirements in this category. And broadband, the only thing that I'll mention is that under the interim final rule, the focus was really on trying to use our fiscal recovery funds to get at areas that did not have broadband service. The final rule made that a little bit more flexible. We could also use our monies for areas where broadband is not really reliable or it's not affordable. Okay, so those are the eligible uses that are allowed and the processes that we would have to go through to try to get us in a project that is allowed. I can go on to the next part unless there's some specific questions, or we could just go to the next part and then hold off for questions at the end. Okay, yes?
Is there any more breakdown on the water overflow uses beyond that?
Yes, yes. For the slides, I only picked out a
15
few.
pages, details, the way the federal government does some of these things. Go to the next section on the eligible uses, and there might be another 15 pages of stuff.
Yes, yes.
Some of those categories are exactly, we're looking at a project right now.
Right,
But
right.
I'd like to see that on there.
Okay, well, if you're interested in knowing more, I can show you the exact page references in here. And they do talk extensively about like some of the projects under the Drinking Water and the Clean Water State Revolving Fund Program and how they're eligible. I don't know if they enumerate every single one. They do urge people to go to the EPA and to look at it. And I was on the EPA site today because at this morning's session, somebody asked, what's green infrastructure? Well, EPA, under the WIN Act, has a very specific definition of what green infrastructure is. And so this is a more technical category, and I can tell you the pages and the references. Yes?
I know you want to go on. Did each city and or town governmental entity that is receiving dollars get a copy of the final rule?
Okay, the question was, does each city and town get a copy of the final rule? The final rule is online. It's on the Treasury's website. And so you can, I will answer that Treasury issued the overview of the final rule. So if you don't want to look through the more than 400 pages of the final rule, you can look at the overview, which is only 44 pages.
Okay. But it just-
However, if you really want to get into the detail, I do recommend going to the final rule. There is a lot more substance there. The final rule is largely broken down. Yes, I have read the final rule, totally. The final rule is largely broken down by talking about how did the interim final rule treat this subject? What were the comments that we received? And here's our response. And in some cases, they said, no, we're keeping the interim final rule as is, or no, we're expanding the interim final rule, or we're changing it completely. And in some instances, they really, really did change it. Yes?
That begs the question of water resources, sewer, was there even more explanation in the final rule about those two areas, or were they let most of those come?
They were expanded. They were expanded.
In the final rule, or just in the?
I believe in the final rule, yes.
That's what I was.
That's what you were told, or that's
My
what?
church told me that they expanded the conservation needs.
That's what she was saying.
Yeah,
Yeah.
yeah. I can't go into all the details of how that may have expanded, other than the broadband. I do know that they expanded that. Yes, there is an area that I did read about.
We would need several.
Yes,
We would need
yeah.
several. Don't think it's-
I think it dealt with the expansion of treatment plants due to population growth and how you have to show that that plant is going to be sustainable. I think that there were some changes with that. Yes, this is the most restrictive category, and there's going to be a lot of study that has to go into it.
There's something more wildlife related to water quality and wildlife, so that you aren't killing the wildlife, something to that effect.
Well, I believe that the green infrastructure would include those bridges where the wildlife can cross over.
Oh, yeah. We just have one on the land, okay? They don't kill.
Yeah. You know, I'll check into that. It is really focused heavily on water issues. Now, of course, water involves wildlife.
Every property owner, wetland, and if you want to preserve the wetland,
Right. There is.
Penetration of bad sources.
There is a wetland. I will say that they do refer readers to like the WIN Act and of course the EPA, heavy push to look at EPA materials on this. We do in Porter County in the plan, the commissioner's plan does have this this expenditure category in the context of stormwater projects, which are allowed. There's many stormwater uses here.
Why?
It's a wide, so there's a wide use, but within that specific category, yes. Okay.
Excuse me. You talked about repaying loss of employees, essential workers. Do they have to prove that they made less money? Or are you going to give them additional money?
The premium pay is an additional money, yes. It's over and above what they're actually making. In fact, you can't use it to sort of cut their pay, to
Right.
save you. It is intended to be additional pay. There is a push, a priority given to the lower paid employees. That's why there is a wage threshold.
Okay. And it's kind of confusing overall. I mean, some people have to have a loss, and some people have to have a comeback, and some people don't. Some businesses don't need to show a loss, and some, it's kind of confusing in that respect.
Yes, I think if you keep the focus on that specific category,
Yeah, I'm talking about tourism.
yes,
So,
exactly.
That's a specific category, and do they have to show a loss, or?
If you are a tourism venue, you don't necessarily have to show a loss because it's presumed that you have been negatively impacted. There are rules, though, on the aid that can be given to the impacted industries, including tourism. One rule is that they had to have been in operation before the pandemic.
Yeah. Okay,
So,
pretty simple.
yeah. Okay, now let's go to part two. What we talked about were the expenditure categories. How can we use this money, and how we might need to assess how we could use the money. In part two, I want to address audit concerns. I know that a lot of people have been asking the question, what are we going to do with this money? And that has been a very big topic, as it should be. But for county auditors and other fiscal officers, that's only one of the questions. There is so much work that needs to be done after those decisions are made. And so I'm going to go through the audit concerns. So with the next slide, okay, you already have it up here. One of the very first steps that we had to do is to pass an ordinance setting up a fund. In government, we operate through fund accounting. And last May, that's exactly what the county commissioners did. They passed an ordinance establishing this fund so that when we got our first distribution from the U.S. Treasury in May, we had some place to put it. This is a screenshot of our financial ledger. As you can see, our office set up this fund. We have the $16.5 million sitting there, and we have zero in expenditures because we haven't spent any money yet. Now, this ledger is going to be changing. The numbers are going to be changing, and in a matter of a few weeks and months as we start to see the expenditures happening and as we get the next half of the Treasury monies. Now, all of the expenditures are going to come out of this fund. Everything's going to happen in this fund. For anyone who is somewhat familiar with county budgeting, it is similar to the way that we have several other funds established, where there are different departments that get a share of that same fund. Essentially, we are going to be building a budget for each of the projects in this fund. Now, before any expenditures happen, according to the State Board of Accounts, the commissioners have to pass a plan. The plan can be amended and revised as we go through the whole project. And then before anything is expended, there has to be an appropriation. An appropriation is basically the legal authority to spend money. At the county level, appropriations are approved by the county council. Appropriations are basically setting up the different budget accounts from which we could spend the money. So for example, if we are spending money out for salaries, it will be in a $1,000 series line item. If we're spending it for capital outlays, it should be in a 4,000 series line item. And so that's what the council will be doing when they act on the appropriations. They will be setting up these budget account codes, essentially establishing a budget for each of the projects. And the council will be addressing this, at least on their agenda, February 22nd. So once we have the appropriations established, after the appropriations are set up, we will be reaching out to each of the departments and the subrecipients to go over the process. But for the most part, if you're familiar with the county process, it's going to follow the same set of rules that we currently have, and then some. Basically, the various departments and the subrecipients will have to submit to us an accounts payable voucher, as well as supporting documentation, which is usually an invoice or a contract of some sort. This is normal procedure in our office. And we always review these claims. If something's not right, if they're using the wrong budget account code, or they don't have proper supporting documentation, we kick it back. And with respects to this particular program, we are going to have heightened scrutiny over this. We already do, but we will have heightened scrutiny over this. Now, there's lots that we have to do to make sure that we're in audit compliance. But I've come to the conclusion that on the next slide, the two most important things that we need to do is document, 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 and communicate, communicate, communicate. Every expenditure out of this fund has to be documented. We have to document every penny of this. So if a department chooses to submit a claim and they do not have any documentation, or they have improper documentation, we will not approve that claim. Nothing will be spent without having proper documentation. To understand the whole process will require a lot of communication. Departments, commissioners, council will all have to communicate with us on an ongoing basis, as will the subrecipients. As I mentioned, the subrecipients fall under some other rules. We will have to come up with a written agreement with every subrecipient that spells out the terms and conditions of the sub-award. We will also have to conduct a risk assessment of all subrecipients. At the same time, our auditor's office will have to also communicate with our external forces, which for this program will be our State Board of Accounts, which is our audit oversight, as well as U.S. Treasury. I mentioned that we're going to training sessions, and in just a few days, I hope to be in another training session. And this is important so that we can continue to ask questions and we can continue to get the most up-to-date guidance so that we ensure that we are fully in compliance. Now, why do we need to have all of this documentation? Well, every year we put together all of our financial reports. The first reports are due February 28th. They're the annual financial reports, and they will be posted on the state's gateway site, and all government units except for schools have to submit that by the February 28th deadline. We in our county have to prepare another set of financial statements that's even more elaborate. Inherent in these financial statements is a thing called CFA. It is the Schedule of Expenditure of Federal Awards, and these are audited. They have a separate federal audit that is done. These are our federal grants. And I am very proud to say that in the past few years, we have had, here in Porter County, a clean audit finding with our CFA. This is important to us because it's really hard to have clean audit findings with federal grants because they tend to be pretty complicated. But we have done a really great job, if I do say so myself. And it's also good because if we have serious audit findings on our federal grants, it could have a negative impact in potentially losing out on other federal grants down the road. So it's important for us to have very strong audit controls, especially when it comes, with all money, but when it comes to federal grants. And this program is absolutely no exception because there are additional reporting requirements. On the next slide, this is our reporting requirements for all government units in the country. We in Porter County are a Tier 2 entity. That means that we receive more than 10 million and we're lower than 250 population. We, the auditor's office, must submit project and expenditure reports on a quarterly basis directly to U.S. Treasury. So how every department is spending their money, how every subrecipient is spending their money, we will be reporting this to Treasury on a quarterly basis. If we were a smaller county or a city or town, we would only have to do this on an annual basis. If we were a larger county, we would have to follow some other rules. Now, our first quarterly report was due January 31st, and this is basically the page from this report. There's really not a whole lot to say because we haven't spent any money yet. And so this is not a really exciting report. It was, of course, submitted on time, but you'll see here our Tier 2 reporting schedule. Those are all of the reports that will be required of us over the reporting period. And by the way, the reporting period here is shown through 2026. All funds must be obligated by December 31st, 2024, with project completion by 2026. And what does obligated mean? Well, the final rule says that it's a legal authority to spend the money via a contract or some other written documentation. So I would like to urge the county that in early 2024, if there are still any monies that have not been spent, to sort of look at what's happening and maybe revise that plan and come up with other projects or throw it in the if we haven't done it already, throw it in that first category of revenue loss, because we have to obligate these monies by the end of 2024 through a written contract. If we don't, they go back to the U.S. government. If we do have a written contract, let's say we only have $300,000 left at that time, and we have a contract that says this project's going to cost $300,000, then we still have through 2026 for the projects to be completed. But those are the reports that will be due during our reporting period. And this is a snapshot. I know it's very hard to read, but these are all of the specific categories that we have to report to U.S. Treasury. It is not so simple as just saying, we spent this much on aid to households. No, we have to break it up specifically. So let's say that we have a township that wants to use part of their allocation to help make rent payments for the lower income people, but they want to use another part of their allocation on, let's say, a capital outlay. You want to build a after-school youth program or something like that. That expenditure will be in two different categories. And we have to report it as such. And if you let a contract, we have to report it as an obligated contract. Now, some of these expenditures will be requiring additional information, additional uploads. And so it's going to be some very interesting reports that I think we're going to be dealing with in the coming months. Okay, so I pretty much have gone over the reporting requirements to the U.S. Treasury. So now I would like to go over how are we going to report all this information to you, the general public. Well, first off, I think U.S. Treasury is working on a way to publicly release the expenditure reports. I don't believe that they've done that yet. But we in the auditor's office are planning to go a little bit over and above what is the bare minimum requirement. We are very, very committed to making this as open and transparent of a process. In other words, you may not agree with the way that the county's spending the money, but you will at least get to see how it's being spent and when it's being spent. So if you go to the auditor's webpage, this is how it's set up right now. At the very top, we have the COVID federal funding tab. So if you go to that, you will get to our page for the federal funding. And right now, the first part deals with the American Rescue Plan Act. If you scroll way down, you'll see a lot of information about the CARES Act that we had going on in the last 2 years. But that's sort of old news now, right? So now we're all focused on ARPA. So this front page just has some basic information. Now, on the little tabs off to the side, first we have ARPA resources and updates. This is going to be a page where if you really want to get some additional detail and you don't really know where to go, you might be able to find it here. Of course, U.S. Treasury is listed first. The Treasury site has lots of information. There's a really interesting federal agency called PRAC. It's the Pandemic Response Accountability Committee. And what this agency does, it works with the IGs in the federal level, and they are tracking the federal COVID dollars all across the country. And yes, they have sought indictments. So this is a really interesting page to, if you're interested in looking at how all of this money on a very large scale is being tracked. The next one that I have listed is NACO, National Association of Counties. This is a treasure trove of information. Go to NACO and you will be able to see all sorts of analyses, all sorts of reports. I go to NACO quite a bit. There is so much information. You could also see how counties and in some instances, cities and towns are spending their ARPA dollars in terms of what they've reported to NACO so far. So it is just a lot of information. Now, if we go back up to, yes, the next tab we have is the ARPA timeline. What I want to do is kind of journal the most significant events with our ARPA spending. And this is being done as a reference, in part for audit purposes, because if you've gone through an audit, you know that the auditors ask for lots of information. And so rather than the auditor's office next year saying, oh yes, what was that meeting that the county council approved those appropriations? What was that meeting where the commissioners, instead of wasting all that time going through all those old minutes, you will be able to find the dates here and then we'll be able to go back to that time. It's just something I think is a good thing to have. But the very last tab off to the side is probably the main one, tracking the spending. We're going to begin by posting our internal control manual. This is something that we are working on right now. That's going to set the rules and the policies of the auditor's office. And the main part, if you scroll down, what we're going to do is we're going to list each of the projects after they have been appropriated. And we're going to list when the appropriation was done, how much was appropriated, and then how much was spent. In some cases, the amount that the council appropriates will not be what's spent because by the time the claims come in, we might go under budget. We won't go over budget, but will come under budget. And then after each of these projects, there'll be a short description of why this project complies with the final rule. It's like our argument as to why we think it's in compliance. That first project premium pay, it's pretty much a given, it is in compliance. And then in some instances, we might have an additional audit analysis and other supporting documentation that we're going to be posting on this website so that the public can really see a well-rounded approach to each of the projects that are approved as we go along. This website is a work in progress. It is nowhere near to being done, I feel, that we have just begun this whole project, even though it may not seem like it to some of you, but we really have just begun. So that is all that I had planned to say for today's presentation, and I am more than open to trying to answer any questions. Yes?
There's a microphone over there.
Wait, I'm sorry.
Is there a direct link to this presentation on our website?
Well, not tonight, right now. I will be posting the handout. I'm going to revise a few things. And so the handout will be posted. And then I found out today that our county commissioner, internet person, I don't know his exact title, but Kurt, is going to actually post a video of this. I think just the morning session, I'm not sure. Pardon me?
There's no video here.
Well, there's a camera right up there.
Oh, okay.
Yes,
Oh, I have a question.
yes.
The sub-recipients deadline is February 28th. That's like, 20 days away. Isn't that kind of a tight deadline for some people?
Okay, I am not aware of what the February 28th
Oh,
deadline.
I thought you said tonight that there was a February 20th deadline to submit. Yes, the sub-recipients had to submit their request to the county by February 28th.
The appropriations are being approved on, or being heard on the 22nd.
Yeah, the county council's going to hear the appropriations. The appropriations in the first part of the commissioner's plan, with the exception of the Memorial Opera House, are going to be on the agenda for the county council on February 22nd. But that does not address the full amount that we're getting. And as you've probably heard, the commissioners have announced that they're going to be forming a steering committee and subcommittees to go over the rest of the spending plan. And so, no, there's,
Have their public meetings, at least 3 sessions.
yes, now, I'm going to be involved with those, but my program today is focused on my office's roles. Yes, yes. So I don't know exactly what the schedule is yet for the steering committees. I don't even think that has been set yet. They haven't been, no, okay. Yes, ma'am.
First of all, thank you for a great presentation. Audible was kind of a dry topic, but a few clarifying questions. Regarding the, what is it, the census tract, the qualified census tract. I want to clarify, if there is a nonprofit, for example, in that geographic vicinity, does that nonprofit have to demonstrate significant financial loss?
No, because it's already deemed
That's what I was
disproportionately
wondering.
impacted,
And then the
as well as a small business in a
That's
case.
what I thought. And then the subrecipient is basically the entity that receives the money from this auditor, correct? I'm just clarifying the term subrecipient.
Okay, it is a entity, whether it's a nonprofit, a small business, a private company, or like another governmental unit like Township Trustees, actually carrying out one of those other programs, or 2 or 3, on our behalf. So let's say we have the county commissioners deciding that they want to do a program that maybe assists elderly individuals who are shut in at home. I would think that that's aid to impacted households. But they don't want any county department to do it, but they know that there's a nice nonprofit in our community that can provide that service. Then they can, I don't necessarily want to use the word contract with, but they can reach this agreement with the nonprofit, and then the monies will go to that nonprofit to carry out that program.
And then,
That's the
I might
subrecipient.
have missed something, but let's say that a project is approved by the county commissioners and council for a certain project, and they receive a grant from this pot of money, and you were talking about submitting invoices, so is this a reimbursable thing where the subrecipient or the nonprofit or the small business pays for the money, pays for the approved expenditure, they submit it to you all, and then they wait X amount of time to get it reimbursed? Is that how it works?
Right. Okay, we're talking just about the subrecipients now.
I think so.
We are still working on those procedures,
Okay.
but our top preference will be that we treat the subrecipients as if they are like another county department. So they will have an appropriation, and then when they order a good or a service, they will get an invoice for that. They will send it directly to our office, and they will submit a voucher with the supporting documentation, and then we will pay it directly out of the fund. Another option is what you mentioned, reimbursement, where let's just say the nonprofit will pay for it first, and then submit the reimbursement claim to our office, and then we will reimburse the nonprofit. U.S. Treasury says they do not have a preference on how this is handled. It's a local decision. My only concern is that we have to track every expenditure. So just because you may be a nonprofit, you need to provide us with that documentation. And I'm going to go where I didn't want to go about advances. I'm really worried about advancing money from the standpoint of the documentation. It's not that I don't trust you, but it's that sometimes things can fall through the cracks. And if we don't have that invoice that matches that expenditure, what happens if, let's just say, we have an entity, I don't want to pick on anyone, but let's just say that we have a subrecipient, and my office advances them $50,000 because that's their project. So when it comes time for us to report this on the expenditure, I have to report $50,000. And that entity, the nonprofit or whatever, told us, the county, that they're going to use it for assistance to households in food insecurity. And I tell Treasury that, but there's no documentation. I already gave them the money, and there's no documentation. And then the next month goes by, and the next month goes by, and somehow this falls through the cracks. Well, when the external auditors come and they look all this up and there's no documentation, we will be written up for it. Now, what happens if we're written up? I don't really know, other than it will be notated. And there is, the worst case scenario is that they would find that we were so in non-compliance that we would have to give the money back. There is a recoupment process in this program. Now, hopefully that will not at all happen, but it is something that we have to be very mindful of. So our top priority will be direct. You just send us the invoice, and then we will pay it on your behalf. That's our top priority. Yes.
There's money in there for administration, because some nonprofits might have to designate a separate person just to administer certain size projects.
Yes. Now, as a subrecipient, yes.
Sometimes those factors are made arbitrarily for a percentage, but they don't want too much administration and not enough
Right.
impact. And
Yes.
that's probably in that fine print somewhere.
You can use this on administrative expenses, yes.
But they usually want you to be under a certain percentage. You know, depending on how high the project is.
Right.
How much, you know what I mean?
Right, yes,
There's an
yes.
algorithm, yeah.
Right, right.
A topic of turn, just means the budget line item.
Right. Yeah, that is something I'll look more into, definitely, but you can use this on administrative expenses. One of the questions at this morning's session is, can we give our money to a city, basically? And yes, we can. We can give this money back. We can give it to the state if we wanted to. And we can also get into partnerships with other government units. There's actually a term called braiding of the money.
That's what we're trying to do. We're trying to braid
Okay.
other 501c3s.
Okay.
Have administration to be able to do this if we're pulling together. There'll be a common elements just within the category.
Okay.
Rather than each one try to do it separately, it would be large enough to make
Right.
a claim.
And that, depending on the structure, that I would think would be allowed, not that that's going to be approved. It's,
We need to make a larger 501c3 just to administer. That's been created.
yes, that's definitely a possibility. There's many possibilities. There's many options for the county government. Any, okay, yes,
Of the 33 million,
yes.
they are going to put that before the council for their first phase, minus the memorial.
Yes, yes.
What is that total?
I think it's just over 9 million, is it?
Of that, and of that 9 million, how much of that is coming out of the 10 million stretch?
Oh, none of it,
None of it, so this is all your own stuff. There's 10 million discretionary to still be going.
Yes. That would bring it down, let's say it's all approved, it would be 33, then bringing it down by, let's just say 10, round it up, it's 9 point something, I believe. So then we're down to 23 million. So then there could be another 10, and then there's 13 million left, if that would be the choice of the county.
Right, okay, I just didn't know if this was coming out of
Right.
10 million or out of.
No. Okay, what the council has on the agenda are the projects that were in the commissioner's plan that they announced back in October.
But I understand that.
Right.
My question is.
Minus the memorial.
Are those funds coming out of that 10 million stretch?
No, because what the commissioners did was they identified the different pots of money. All of it was in the area of, well, no, not all of it. Let me see, let me backtrack. Okay, so of the projects, most of it was in that second category, public health and negative economic impacts. And there was the category premium pay. And then there's the category of infrastructure, and that's the stormwater projects. So there's, of the three categories, there's the three different, the broad categories. And then it gets more specific, especially with that second category. There is public health, which is the behavioral health study. Okay, yes. And then there's the COVID-19 mitigation and prevention. This is a courtroom project where they're planning on expanding the space for greater jury. Pardon me? Yes, and this is an enumerated use. It's a building modification to mitigate the spread of COVID-19, i.e. social distancing. I mean, it's right there in the rule. And then the next one is responding to negative impacts, which is the second part of that category. And this one is the assistance to households and or small businesses and nonprofits, and that is the township program. And then the other one is assistance to small businesses through the RDC. And then assistance to impacted industries, including tourism. Part of it is for the completion of the Marquette Trail, and the other is, well, okay, that is still listed there, but that's not what's going to be appropriated. This is just the listing, what was in the commissioner's plan. And then the next one is the building upgrades at the visitor center. Then there's premium pay,
Are all these already decided?
They were in the commissioner's first phase, yes, or plan, yes.
I mean, they're voted on, it's definite.
The commissioners did include it in their plan, yes.
She's saying yes, you're saying no.
But the council
still has to
now appropriates it. Yes.
It's also a south end one,
That's the small businesses to RDC. The RDC is going to be administering that program.
There's no other questions.
And then, well, there's the infrastructure, stormwater, and premium pay. That 1.2 million was in the commissioner's plan. Our calculations have brought it down. Yeah, quite a bit.
About 983?
I'm sorry?
About 983.
983. And that's just advertised. Depending on some final decisions that the council will have to make, it'll probably be a little bit lower, but we can address that later.
Can an individual ask for stormwater money? Especially if that individual has already been on the books for 20 years? I mean, you said
I think stormwater
You said $4 million.
is specifically listed under the infrastructure program. That is not like an assistance to an individual. It's for an actual program, project. And in our county, it's going to be the Department of Stormwater and Development. That will be carrying out these projects. It's the stormwater, well, actually, they say it's the Stormwater Management Board, but it's going to be the Stormwater Department doing it. Yes.
I know that on October 26th, the commissioners did put their expenses or their expenditures in the list, and Homer Roundhouse was about 5.5 million. You know, I would say that the county council has voted that in that first tranche, plus the 5.5, because I was under the impression that the county council has not voted that in.
No, the county council has not taken action at all yet, but it's on their agenda for the February 22nd meeting. Except for the Memorial Opera House. Because yes, that has been determined that that's off the books for right now. But it's just the appropriations for those other projects that's on the agenda. Whether the council, I'm not going to talk for the council at all, so that's up to them.
Plenty of your time.
I'm sorry?
Don't go there, you got plenty of your time.
Yes, yes. Okay. If there are no other questions, thank you so much for coming. I
That's all I heard, that's all I'm taking away from that.
Copy of that section that's talking about the water resources and conservation. And if there's some way to get the detail in that 400-page document that delineates it even more.
I can take your name if you have.